isn't it, Harsh? And also welcome on board. Buy now, sell now. But let me take a look at and let me actually take you through what the markets are doing at this juncture. Like Harsh also mentioned, that you're seeing 0.3% uptick coming in for the benchmark indices as we speak. But it is actually today you can take some sort of a solace with the fact that the benchmark indices are performing much better when compared to the broader markets or even Nifty Bank, because you have the broader markets that were in negative territory. Last time I checked, there you go, 0.5% downtick coming in for the mid-cap index. You have Nifty Bank that is nudging towards that negative territory. It is trading flat with a negative bias as we speak. So let me take you through the list of gainers as of now. You have UPL, HCL Tech, Infosys, Tech Mahindra, Adani Ports that are ruling the charts. Also add to that Reliance Industries, good strength coming in from Reliance Industries. That's the one that's lending support to the benchmark indices today. 1.3% uptick coming in for Reliance Industries. But on the losing side, you have Adani Enterprises, SBI Life, Apollo Hospitals, as well as BPCL and Sun Pharma as well, that are actually declining in trade today. So to extrapolate from that, if you look at the sectoral indices, you have Nifty IT Index, that is the top sectoral gainer today. Remember that top 4 out of the 5 Nifty gainers are from the IT Index. So you have Nifty IT Index that is trading higher by about 1.3%. FMCG also seeing good strength in trade today. But on the flip side is the Realty Index that's seeing a lot of pressure. 2% downtick coming in for Realty Index. Power Index also seeing a downtick, as well as the broader markets like I mentioned. So this is how the market setup is looking like at this juncture. Harsh, it is the benchmarks that are trying to hold on to good gains. But today on BNS and Lens, we are going to talk about footwear stocks, isn't it?
Well, yes, Cheryl. Footwear stocks under focus on Lens today, and that's the likes of Relaxo, Liberty, Campus. They've all reported a weak set of numbers, while Bata will be reporting its results today. But let's go across to Vinny for a detailed analysis on what to make of those results.
So, just a round off of numbers coming in from the footwear companies. Yes, Bata is yet to report their numbers today. But let's look at Relaxo Footwear, Liberty, Mirza International, as well as Campus Activewear. Now, Relaxo, Liberty, as well as Mirza International, as well as Campus Activewear actually have reported a weak set of numbers, while to an exception, Mirza International has actually reported a strong set of numbers. When you look at Mirza International's numbers, when we're comparing on a YOY basis, the company has seen a revenue growth of 1%, profit growth of 31%, while margins are at 16.35%. Yes, so Mirza International today is buzzing in trade on the back of its numbers, while when you look at Liberty and Campus Activewear, they are tanking in trade today, falling in trade today because of a weak set of numbers that they reported in Q3. Now, even Relaxo Footwear has actually reported a weak set of numbers, and all their margins actually, when you look at it, we're seeing a contraction coming in terms of margins. Obviously, that inflationary pressure, price hikes that they were taken were not enough maybe, so that is a factor coming into play for their margin front. But stock move also, when you look at the stock move also, in the last 1 year, Relaxo and Bata have actually seen a sharp correction coming in, while on the other hand, we have seen a sharp rally coming in Campus Activewear, but in the last 6 months, we've seen a decline coming in Campus Activewear stock. So that is going to be a place to see that, how is it actually shaping up now. Bata is a number that we're watching out for. It's expected to be a decent set of numbers, but surely we'll be keeping an eye out on. And obviously, in terms of commentary that actually came in for Relaxo Footwear, yes, there was pressure coming in this time around is what the company highlighted. But now they're starting to see an improvement coming in sales volumes, and raw material cost is now seen stabilizing. So yes, keep an eye out on that. But as of now, Relaxo Footwear, Liberty, as well as Campus Activewear reported a weak set of numbers in Q3.
All right, thank you so much for that, Vinny, for putting into context of all the footwear companies so far that have reported the numbers, how their growth has been. Remember, Bata is also yet to report its numbers, rather. Let's bring on board our experts today to get their view on the footwear space. We have Nirav Chheda joining us on the technical front and Rajesh Agarwal on the fundamental side. A very good morning to you, Nirav, as well as Rajesh. Welcome. First of all, good morning. I'm stumped because all of us are wearing the shades of Valentine's Day. Looks like it. I'm in red. Nirav is wearing red tie with white shirt, and there you go, you're wearing red with black, Rajesh. So how is the mood and sentiment back in Kolkata?
See, it's love in the air. It's Valentine's Day, so everywhere it's red or black going on. So I thought going with the trend and coming on your show for our viewers with a Valentine message of money. Happy Valentine's Day.
Absolutely, and especially this is a show for all of our viewers who love the stock market, who love investing, who love putting in their money in equity as an asset class. But let me get your view firstly, Rajesh. on what is your view on the footwear companies, given the fact that so far, like Vinny also mentioned, the weak set of numbers have been reported by these companies. For someone who's looking at the footwear stocks as an investment opportunity, do you think that the fundamentals are intact?
See, as Vinny rightly pointed out, that the numbers have been pretty bad for almost all the companies except one or two like Mirza. And we have done a channel check across the market, and we have come to our conclusion that there have been a considerable market share loss for footwear companies in two major categories. One is open footwear and the other is sports shoe. That's because of the subdued demand in the mass segment, because of inflation and decreasing purchasing power of the consumers, which have given rise to new affordable brands which have come out on online and all, and the organized players. So that that segment has gained market share, and the listed players or the organized players have lost some market share. One, because of subdued demand. Two, because of high inflation, and three, if you compare it with the last year's corresponding quarter, that's third quarter of the last year, FY21. That time the volumes have gone up because of the reopening thing. Schools were reopened. There were a lot of volume gains. There were change in GST, and that increased the share of organized players. All that has been put behind, and they are setting it down. So I think this kind of demand destruction is going to continue for some more time. Maybe from the first quarter of the next year, we might see some amount of new demand coming in because of new school session and all. But for the next quarter also, I think there are going to be margin pressures.
Right. Thank you so much for that perspective, Rajesh. Let me switch it over to Nirav. Nirav, talk to us about what you are seeing in terms of trends on the technical front, especially with regard to the footwear space.
Yeah, so as a space, as Rajesh sir said, most of the stocks are actually down. I believe the leader of the pack, Bata, at this point, it has been seeing a consistent drawdown from the last 6 months. Ever since it made a high of around 2200, it is now around the 1500 odd levels. The chart looks negative. Most of the stocks like Relaxo, Liberty, their charts are looking negative at this point of time. Only one stock probably which stands out has been Mirza International, which has been making a higher top higher bottom formation, has made a new high just recently. But that is also into consolidation now from the last 1 month. So I believe picking any one stock is difficult in this particular space. But yes, I do see an opportunity here in campus. This stock has come down from about 650 odd. It has made a good bottom around this 350, 360 odd levels. Most importantly, it has gone up above its 50-day moving average, which most of the footwear companies haven't really gone up. So that is one point to ponder here. Also, there's another thing, the RSI divergence. There is a positive divergence when the stock was going down. The RSI was moving up, so that is another positive for this particular stock. The third point being, the volumes. Ever since it was going up about 2 years back, there was tremendous amount of volume around this 370, 400 range. And then when it came down again, you're seeing heightened volumes in between this 425 and 370 range. So I believe some good accumulation is going on, and this stock is now likely to move up towards that 470 odd levels, which is the retracement of the whole fall from about 630, 640 odd to about 370 odd. So it can come up to 470 odd. Look to buy this stock at current levels. You can keep a stop loss of around 390 for your longs.
Right. So now that we've got that out of the way, we'll slip into a short break though. Of course, we'll start taking up specific queries of some of the requests that we've received on the other side of this break. So stay tuned.
Allcargo, powered by Housing.com.
Rate expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a rate expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a rate expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a rate expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And before we get going with all of your stock-related queries, let's put the spotlight on Allcargo Logistics. No doubt the stock is down about 15% as we speak, but it has recovered from the day's lowest point. And the reason for that downtick is the Q3 earnings. But let's understand what exactly transpired in the quarter gone by with the management of Allcargo Logistics. We are joined by Mr. Ravi Jhakar, who is the Chief Strategy Officer at Allcargo Logistics. A very good morning to you, Mr. Jhakar. Thank you so much for joining us on ET Now. And let me firstly directly dive into your into the earnings. And we understand that the reported numbers are actually impacted due to the discontinued operations reporting. But if you could clarify further on the like-to-like basis, how the performance has been for your company with regards to your volumes, your PAT, or even revenue for the matter of fact.
So thank you. It's a pleasure to be on your show. And as you rightly stated, we received the demerger order, which has been uploaded on the NCLT website, and therefore we were obligated to report the numbers in a slightly different format, showcasing continuing and the discontinuing businesses. But as you know, the demerger is a mirror demerger, wherein each shareholder of Allcargo will get one share in all the three entities. So therefore, the best way is to look at the combined performance of all the businesses. And if you look at the international supply chain, express and contract logistics businesses, which will continue to be in Allcargo as well as the demerged businesses, put together, the EBITDA for the quarter is over 350 crores. So I think that's the number. The number which has been reported on the continuing business only represents a part of the business. So there is one clarification I'm happy to share through your channel. And besides that, if you look at the overall performance, I think, from a macroeconomic environment perspective, this was one-off quarter, which was impacted by the lockdown in China. And we don't even have to anticipate when this would change because we are already seeing that change in China. The factories are back to operations. The supply chains have started moving, starting from post-Chinese New Year, which is about 10 days ago. So therefore, we already see that the decline which was there from October, November onwards continued till January, but that is something which has already been arrested. And we see that the macroeconomic environments would continue to improve from here. What is more important is how do we perform relative to the industry? And I'm glad to share that we have expanded our market share. And this quarter, we further regained market share. And now our global LCL market share stands at 15%, which is the highest ever, and is now significantly ahead of the competition. So our digital play, our focus on better services, new trade lanes, and all those programs are helping us gain market share. And as this one-off quarter, passes by, and we see resumption in normal trade volumes, you would see strong rebound in the performance as well. So those are the two important points. And the third point, which I think is important for everyone to know, is that from a balance sheet perspective, that's been a significant strength for us because these are all high cash generating asset-light businesses, which means that as of 31st December, while we have reported a net consolidated of about 130 crores, that has already been eliminated. Post the 31st December closing, we signed the agreement with Blackstone, which was long pending. And that has already moved about 285 crores of debt off our balance sheet and also brought in additional cash of over 120 crores. So as we speak today, we are sitting as cash positive on a net console basis with robust cash flows continuing to come in. Our digital programs are all well placed. We continue to expand in the global markets, gaining market share. So from a long-term strategic perspective, we see this quarter amidst an economic slowdown as a further confidence on our capabilities to earn and grow market share.
Right, Mr. Jhakar. Let me also come in. I'm Harsh here. So, of course, one piece you've clarified is with regard to the revenue as well as the EBITDA. So, now going forward, how should one look at EBITDA margins? It's of course a high inflationary environment, so there is some amount of cost pressure piling up. But so how should one view margins going forward into FY24 as well? If you could give us some visibility.
Yeah, so I would say that, one part of revenue is ocean freight, which has come down. So therefore, if you see in this quarter also, the revenues came down by about 970 odd crores. OPEX also came down by about 900 crores. So optically, the gross margin percentage actually improved to the highest ever, if you look at that way. But that's not the right way. I would say from a gross margin perspective, you should see a rebound and increase in the gross margin on an absolute basis. Percentage basis obviously will remain same or improve further as the ocean freights are likely to remain at these lower levels. And we would see continued improvement on the gross profit. From a future perspective, like I said, the January was still as impacted from a China lockdown, and therefore the global trades were subdued. From February onwards, we are seeing the trade opening up. So I would say the Jan to March quarter could be slightly sluggish. But from April onwards, you should see trade lanes resuming normal trade. And on the market share within that, we've already been performing very well, and that would continue.
Right, Mr. Jakar. So you did speak upon how your international trade was impacted due to China shutdown. So the revenue for your international supply chain segment had come in at around 3,670 crore rupees as against 5,200 crore rupees on a year-on-year basis. Would you attribute the decline of this only to this one particular reason? Because I'm guessing this is not on account of accounting, right?
No, this is just ocean freight, which is a pass-through cost. So like I mentioned, if the ocean freight rates come down, both operating costs also comes down. So, our revenue came down on a continuing business by 970 crores. Operating costs also came down by 900 crores. This is almost like a pass-through cost for a large part of the business. And so I'm not saying that the revenues will bounce back. I'm saying the EBITDA, which you see today, is already at a healthy 350 crores. If you look at it the right way, because some of the businesses have not been reported in the continuing businesses. If you look at the all businesses combined, it's at about 350 crores. And this was the worst impacted quarter from a slowdown perspective. So from April onwards, we should see better performance on these numbers.
Right. And, of course, now China reopening as well. So does that at all impact your numbers going into FY24? How should one look at top line?
So I would say that, China opening up and the global trade getting back to normal growth rates should help us accelerate the volume growth, which has been constrained. So while we increase the market share, the volumes were flat year on year because the market degrew, right? So now we will hold on to the market share, or rather endeavor to further increase. And as the volumes bounce back, you should see a volume expansion. And I would say that while we would not be, in a position to give specific guidance in FY24, we have already shared the guidance for 2026, which is slightly medium term, and we do not see any change in that guidance.
Right. So this is about FY24. How has the current quarter been for the company? If you could tell me about something about the volume growth, how was the volumes been in the month of January and Feb? Given the fact that you've said that you are expecting to see a bounce back in your growth from April onwards, given the fact that Q3 was impacted by slowdown, are you seeing that sort of a trend continue in Q4 as well?
So on a monthly basis, the trend is now reversing. February is already showing signs of, normalized trade. But since the Jan to March quarter has a part of January in it, which is why I said on a quarterly basis, you might see the impact in Jan to March, and only from April onwards, one would see the positive bounce back. But from a monthly basis, we are already seeing that trade patterns shifting towards more normalized trade, as China has started to open up post the Chinese New Year, which was in Jan and this time.
Right. And sorry for interrupting there, but of course your stock has seen a bit of a battering of late. And any specific investor concerns that you are seeing, maybe top 2 to 3 investor concerns which you are hearing from investors, which you would want to allay with regard to our viewers?
No, I think I would just want to reiterate that the company stands on an extremely robust balance sheet with 0 net debt. We in fact are cash positive on a consolidated net debt basis. Our digital plans are in place. We have been expanding global market share despite being global leaders. So all the fundamental strengths are in place, and we would continue to drive the growth that we have envisioned for. There could be a quarter or quarter and a half driven by the COVID restrictions or macroeconomic environment, but that does not impact the long-term strategy and the story that remains intact for us. So that's the only messaging I would like to give and highlight that from a performance perspective, the best way to look at the business is to look at the combined performance, because that is the way to look at the wholesome performance of all the businesses put together. And that is where, like I said, I would reiterate the EBITDA for the combined businesses put together is over 350 crores for the quarter ended December 2022.
Point taken. Mr. Jakar, you did mention that you cannot share exact numbers with us with regards to your FY24, though you've expressed the fact that you are expecting to see a pickup from April onwards. So let me ask about your margins. Do you see any downside risk for your margins, given the fact that even crude oil could pay a spike in crude oil prices could play a spoil sport, isn't it?
No, so gross profit in percentage terms would remain similar or improve from here.
All right, so that's the outlook coming in for FY24. But on that note, we let you go, Mr. Jakar. Thank you so much for joining us on ET Now and clarifying to our viewers about the quarter gone by for the company and where you stand going ahead, saying that they are expecting to see a recovery coming ahead, and already they are seeing that trickle in for Allcargo. And as you can see, the stock price right now is trading lower by about 14%, is definitely off the day's lowest point. On that note, we slip into a break, and when we come back, we will take your queries, so viewers, don't go anywhere.
Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
and power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Broader market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and we have our experts today, Nirav Cheda as well as Rajesh Agarwal. Thank you so much for both of you all for waiting by while we were talking to the management of Allcargo. But Rajesh, before we kickstart taking all of our investor queries and our viewer queries, what's your take? What should viewers do in this particular market? Do you think that no love is lost? You should continue being in love with the markets, and how should you actually continue to make sure that you are able to protect the wealth that you've created?
See, that's a fact that there is no love lost, because we have seen Sensex traveling from 100 odd points to 60,000 odd levels, and in between a lot of stories have been there, a lot of negative things have been there. But one thing in the current market scenario I would like to point out to investors as a whole, that just because a stock has fallen by 30%, 40%, it doesn't mean that one should go ahead and buy unless you know that the fundamentals are intact. I have come across a number of queries in the recent past that this stock has gone down by 40%, 50%, should I go ahead and buy? There can be multiple reasons for a company's share price to decline, I will tell you. There might be deterioration in numbers, there might be negative reports, company continuously missing their targets or guidance. There might be deterioration in company fundamentals, there might be fraud charges or regulatory investigations going on, there may be change in management, resignation of top management guys. So we have to find out whether the fall is due to temporary reasons. Then the long-term investors can continue to hold or even buy. But if there are fundamental changes, some regulatory inquiries are going on, it's better not to catch a falling knife. That can be dangerous. You never know where the fall is going to stop. So only if the fundamentals are strong, dip into the company's business to understand if we are investing in a falling knife or a value stock.
Right, great insights there for the investor. But we'll start taking up queries from whatever queries we've been receiving, and I'll start off with the first query. My first query is to Rajesh. There's Ram from Hyderabad who's asking, he holds 2100 shares of BEL at 97 rupees a share. He has a 5 to 8 year horizon. He's asking whether he should add more to the current price or what should his strategy be?
See, the company is doing very well with the kind of focus of the government on defense, indigenous manufacturing of defense. I think the company has got very good prospects going. One can continue to hold, but for adding new, I think 85 to 88 levels would be a very comfortable level to add. One can hold, buy on dip strategy can be taken in this kind of stock.
All right, Nirav, coming to you. This one is coming from Saeed, and he's bought Hindustan Zinc at a level of 353 rupees, about 1,000 shares of Hindustan Zinc. He's saying currently he's in the loss, so he wants to know whether he should continue to hold on to this or sell. What's your take coming based on charts?
Yeah, see, based on chart, this stock is now coming towards its support level. It is a little bit lower still. This overall support, a strong support area is around 312 levels. So, you can keep a stop loss of around 310. If it goes down below, that is when, probably exit. But the overall pattern is still positive. I believe you can continue to hold with that stop loss. The stock is likely to again go up, up to the 370. 380 odd level. So hold on to your positions and keep a stop loss of around 310. Once 370, 380 comes, book profits.
Right. Nirav, I'll stick to you. We have Divya, who's actually a new investor. She's making a good solid loss on a couple of stocks. One is JSW Energy, which she's bought at 310 a share, and the other is GIC, which she's bought at 171. What's your advice? What's your take on this?
Yeah, so I'll take up JSW first. A very big rally was seen in this particular stock from 40 onwards. This stock went up to 400 odd levels, and post such a big rally, there is likely to be consolidation, which is what we are seeing here. Having said that, it should still go on for another a couple of months more, and this stock can probably correct to 180 odd. If you can hold on till there, then you should hold on. But if you can't hold on for another 40-50 rupees still, it's better to exit now and look to buy when it comes to around 180. I believe in the next couple of months, this stock should make a low of around 180 odd. That's what it is. For GIC RE, see GIC, the overall trend for this particular stock was negative. And after a long time, some good volumes were seen in this particular stock from 140 onwards, and good buying volumes, delivery volumes were seen. A good breakout has come in as well, but yes, the stock did not sustain, and selling has been seen. The good part is this stock has retested its breakout levels. Um, Generally, whenever such a rebound happens, I believe it is for the good. The overall chart is positive. You can hold on to your position. You can add your positions at current levels. I don't think the stock will go down below the 125 level. So keep that stop loss of 125 and hold on to it. I believe this stock has potential to move up towards that 200 to 25 levels again. You will get a good bargain if you're buying here. So average at current levels.
Right. Let me give you a breather then, Nirav, and let me ask the next question to Rajesh instead. And Rajesh, this is a query coming in from Saumitra, and he's asking your view on NAM, India, and other AMC counters. With their valuations now cheap, is it an area worth investing, or is better to stay away from this entire space? He's basically posed this question to you, given the fact that the industry that we are in is very closely associated with the AMC and with the investment in the asset management company. So he wants to know, for now, all his investments have not yielded any results. So does it make sense now to take a fresh look at these counters and look to invest in them?
See, for a longer term, yes. Because if you look at numbers, Nippon Life is trading at a considerable discount to the other AMC players like HDFC and all. But one thing is for sure, equity is going to be there, retail investors are going to be there, and the kind of SIPs and all those things which are coming into in these companies are growing day by day. If you look at HDFC AMC portfolio, the equity portfolio is very high. And in the recent budget, where we have seen premium of more than 5 lakh rupees being taxed in the redemption part. So I believe that those high net worth investors would be moving some of their amount. I won't say that the entire amount would be shifted, but some of their investment would be shifted to mutual funds or AMCs. So again, that is going to be benefited in the long run. Valuation, of course, after the kind of correction which we have witnessed in the recent past, has become quite attractive. So if somebody is having a time horizon of maybe 12 to 18 months, one can expect 15 to 20% upside from the current market price.
Right. I'll switch it back to Nirav. Nirav, we have an investor, Vivek, who wishes to enter into Hindustan Copper. The stock is down 20% over the last month or so, quite a steep fall. What's the right entry level is what he's asking.
See, in terms of Hindustan Copper, I think this is a good level to enter again. This stock has witnessed 2 years of consolidation ever since it made a high of around 170 odd. The stock is just within a range. So the lower band for this particular stock is around 102, 105 odd levels, which is where it is right now. This is a good level to enter again. Keep a small stop loss of around 95 for your longs, and once it comes up towards 120, 25, that is when you book profits.
Right, next one also is coming your way, Nirav, is on Dynamatic Technologies. This question is by Santi. He's saying the stock saw a downtick of about 9% yesterday. Today as well, the stock is under pressure. he's not been able to analyze the fall for this particular counter, given the fact that he's also mentioned that the current market price of the stock is still above the 100 and 200 DMA. So he wants to know your views on this one for a fresh position for the long term with a risk-reward opportunity in the current price.
Yeah, see, at this point, I can tell you about the near term because I believe, at the higher level, there has been volumes which were seen around the 3000 levels. So someone has sold in this stock at that level. And from there, there's a negative divergence on the longer term charts, which is a negative sign. So I believe this stock can pretty much come down towards this 2000 odd levels, which is where probably can be a good level to buy this stock. So don't buy it here. Wait for that 2000 level to come in, and that is when look to buy this stock. This has just broken the 50-day moving average as well. It can probably come down towards its 200-day moving average.
Right. I'll switch it over to Rajesh. Rajesh, we have a query. K. Venugopal Reddy from Hyderabad who wants to know what to do with Tata Power. He's purchased the shares at 233 rupees a piece. Should he average down is what he's asking.
It's a long-term hold. One can even add at this point of time, we expect the company to do very well. The numbers have been very good this quarter. The renewable business is doing well. They have sold some stake in the renewable business at a very lofty valuation, and that's again going to help the company in increasing their renewable presence. All in all, the fundamentals are intact and they're growing like anything. I think this correction is giving an opportunity to buy for a long-term target by 12 to 18 months, for a 240 to 50 odd range.
Right. The next one that I have is coming in from Satya. Satya has asked two different queries, but there's one pointed query only for you, Nirav, because he's mentioning that he has purchased ITD Cementation on your recommendation at a price of around 135 rupees per share. He wants to know, has your view changed on this particular counter, given the fact that it is nowhere close to the buy price right now? What should his strategy be with this particular counter?
Great that you did purchase this stock. I really like it. See, there are a lot of reasons why you should be holding on to this stock, and this was a long-term kind of a view which I had given on a different channel. But see, two things here to note is, there are two parts to ITD cementation. One is before 2020 and one is after 2020. Post 2020, the volumes have really risen, and there has been not even 1 week where the volumes are not, less. The volumes are really good in this stock. Delivery volumes have increased, and this stock has been, making a higher top, higher bottom formation in the longer term chart, which it hasn't really broken as yet. So this is a good sign. Also, this stock had witnessed a breakout from that 100 levels. It had gone up to 135, and that level had been broken, but there was a failure of that breakout, unfortunately. But this is a very good level to enter again. I believe you should look to buy this stock at current levels. It is a very good stock in the longer term period, and 200 to 220 is the level that I mentioned even last time. That is what I'll stick to. I really believe 100% retracement should happen. That is where this stock had fallen from. So look to buy it here. You can keep a stop loss of around 92 for your longs, and once that 200 to 20 comes, book profits.
Right, thanks for that, Nirav. Positive on ITD cementation there. But with that, we'll slip into a very short break. More on the other side, of course, so stay tuned.
Biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Where the market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Where the market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Where the market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And let's continue taking all of your stock-related queries then. And this one is coming in from Swayam. And this one is for you, Nirav. Swayam has escorts about 1,980 put call on February 5th of Feb options is what he's saying. He's saying he has 5 lots at 12. He wants your weekly view on this one.
I couldn't hear the put that he has. It is 1980, right?
Yeah, 1980. Right.
Okay, yeah. So, see, this stock actually is range bound at this point. It is basically in between, 1980 on the downside and, about that 2120 on the upside. It has just hit a resistance at this point of time around this 2100, 2110 odd levels. There is a likelihood that this stock can come down towards this 2000 to 1980 odd levels. I believe he can hold on to the stock, the put until 2110. This level is not broken. There are chances the stock comes down to around 2019-80 levels. Once it does come down, book profits in the put because that's a good support area. There is a likelihood of a bounce from there.
Right. I'll switch over to Rajesh. We have Karan here, who's looking at a mid to long-term view on Fortis Health. He has around 200 shares at 260 rupees a piece. What should he do? Should he add more?
See, adding more at this point of time would not be recommended because although the fundamentals are good, the numbers have been good, it's growing very well, but then there are a lot of things from the past, the legacy which it's carrying is playing a problem with that. And no meaningful upside can be seen unless that are being solved. It's better to switch to some other healthcare stock because we are very bullish on the healthcare sector as such. If you go with the leader, Apollo Hospital would be a better choice, or a Narayan Hrudayalaya or a Inbo Medicare. These stocks can be accumulated at this point of time rather than adding more to Fortis.
All right, with that, let's quickly kickstart with the rapid fire then. And the first one is coming to you. Nirav. Shobna has Tarsons. She already has 100 shares purchased at 700 rupees per share. What should she do with this one?
Exit it. Very important support has been broken. Downside, it can come down to 540 levels.
Right. Rajesh, we have Rakesh from Ghaziabad who's holding 3,000 shares in BHEL at 60 bucks a piece. What should he do with it?
Book partial profit. Although the numbers have been good, but still it's better to book partial profit.
Okay, Indu wants to know TD Power or KEC International. Which one is a good capex player for the medium term, Rajesh?
KEC International. Go with KEC International.
Right. We have Nawaz from Lucknow who's looking at Sumaya Industries at 31 rupees a share. Nirav, any views on it?
No, I have no views on it. It's a penny stock at this point. No views on it.
All right. This one is from Mukil. He's writing to us from Bangalore. India Cements. He's bought 1,000 shares at 200 rupees per share. Will it go up, Nirav?
No, unlikely to go up. I believe some volumes have happened around this 250 level. Someone has sold. It should first come down towards 160 odd levels. That is where you buy.
Right, Nirav, I'll stick to you. We have Bharat who's asking your view on Adani Ports. What should he do?
Adani Ports technically has finished its bottom, but there can be good volatility and there are chances it can come down to 500, which is a good support area. That is where you look to buy the stock. You can keep a stop loss of around 400 for your longs. Again, this will be a larger stop loss.
Right, this one is coming from Godfrey and he wants to know between Tata Consumer and United Spirits for the long term, which one he should look to buy right now, Rajesh?
Tata Consumer can be a good choice. The stock has not been doing anything on the process for a very long time. So it's time one can accumulate.
Rajesh, I'll stick to you. We have Swati who's asking us for a long-term view on NOSIL.
Add.
All right, and also along with that, we have another one that is coming in from Rajagopal. He has Allcargo as well as TCI. Which one should he buy for the long term for 2 to 3 years, Rajesh?
Avoid both of them. I think it's better to go to Concor. That's a better choice.
All right, and I believe with that, we've come to the end of the rapid fire. Thank you so much, Nirav, as well as Rajesh, for joining us on the show, for taking all of our viewer-related queries, as well as giving your view on the footwear counters. But with that, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Harsh, myself, and the team that put the show together. So stay tuned to ET Now. Markets at Noon coming up next.